Stedman Fuller, Custis of Kingston, acting for the Governor General, directors of Scotia Group, colleagues, the head table here, special invited guests. I'm not sure, I know we're expecting some of the partners from Capri going to be here, but and listeners on Nationwide. Which is part of the reason we need to make sure we start on time, because we've got a lot of people listening in. And we really welcome you all here. But good evening. We want to thank you for joining us this evening in this opportunity to talk about what is happening internationally, but especially on those areas that are important to Jamaica, whether it be geography, commodities, looking at how we are influenced by the global economy. And what those implications will be for us. I'm delighted to welcome my colleague, Pablo Brayard, Head of International Economics and Research, someone who is well known in Jamaica. I know we've got a number of clients that have responded to me saying, gee, it's good to have Pablo back. I know one in particular indicated that last time he was here, everything he said came true. Now, I'm not sure if that is in fact true, but take credit for it. Take credit for it when you get it. But certainly someone who's well recognized as providing a lot of insight, and particularly during our question and answer period will be something that people who know Pablo will look forward to. Also want to, for those who have not met him, introduce Norm Stevenson at my far left, your far right. Who's the relatively new head of our commercial corporate banking unit. Norm has been here for a few months. He joined Scotiabank Canada in 1980, has held progressively more senior roles before coming to head corporate and commercial banking here in Jamaica, had been with Roynat Capital, our merchant banking and structured finance unit in Canada. And he's down here to continue to lead the team that is working to provide total financing solutions to our commercial and corporate customers. It's good to have a lot of those commercial corporate customers with us this evening, and I know we'll continue to have people drifting in. Certainly we have over the years built and maintained a strong reputation. Last year in particular was a good year for us commercial corporately. We saw significant growth, particularly in our small business and commercial private sector portfolios. We saw double-digit growth in commercial corporate deposit business and growth in our customer base, and that certainly reflects the strength and stability that we're known for in challenging times, particularly as valued. And we have really established a position as market leader in capital markets and structured finance. I know, if not here already, we'll have Beresford Gray, who heads that unit here, and we've really built our reputation in the last couple of years in that area. Our focus is going to be the international markets. One thing Pablo will tell you, he's not an expert in Jamaica. For that we have Adrian here, Adrian Stokes, but obviously it's an important time in Jamaica's history. We've just come through the second debt exchange in 3 years. We've just signed an agreement with the IMF, an extended fund facility. And now is the time that things get difficult. It's not the end of a process, but the beginning of one. And it's important that all of us in the financial sector, in the private sector, in all sectors of society come together and cooperate to do what has to be done to see the economy move forward. Because we aren't going to get this good of an opportunity in a long time, and it's important that we seize this opportunity. So we invite you to take the information that's going to be discussed this evening, look for those opportunities and that will be presented in your businesses, to see those challenges that may be there and how you can react to mitigate from those challenges. We at Scotiabank remain committed to facilitating both the government and all of our clients in maximizing and taking advantage of opportunities that are presented. We obviously have built a huge reputation for our strength and stability, particularly in challenging times. We once again have been recognized as the best emerging bank in Jamaica for 2013 by Global Finance. We've been recognized as Global Bank of the Year internationally, Scotiabank. We continue to be recognized as one of the most solid and stable banks in the world. And this is one of those examples of how we can leverage our strength in research, economic research internationally, and bring that to you, our clients, to bring value. So with that, again, I thank you all for being here. I am sure it will be an insightful and interesting evening, and look forward to the proceedings. Thank you very much.
Thank you, Bruce. We want to acknowledge, since we started, Bruce coming, Mr. Don Webby, who chairs the Economic Policy Committee of the Private Sector Organization of Jamaica. I want to acknowledge Dr. Christopher Tufton, as per lineup. We'll hear now some global perspectives in terms of global opportunities, concerns, from Pablo, as I'm going to introduce him, and he'll be followed by Dr. Adrian Stokes, who will give a local perspective. And then we're going to have a broader panel discussion, and it's really, we'll hear one more perspective, which will come from Miss Nadine Haywood. And it's very important, because then we're going to leave the time for an open mic, what we say, from discussions to hear, and I see persons having questions already. You can also write your questions if you are very shy and you don't want to be associated with a question. Is the Vice President and Head of International Research for Scotiabank Group. He provides advice to senior executive management on economic, political, and financial risk, and all the factors affecting Scotiabank's global operations. He's also the Chief Latin American Economist and is responsible for emerging markets intelligence. Pablo is a member of the Economic Advisory Committee of the Institute of International Finance. He's a member of the Emerging Markets Group of the Argentinian Council for International Relations. He's a member of the Advisory Board for the Center of Entrepreneurship of the IAE, the School of Business in Argentina. He has tremendous experience, and we want to hear from him as he brings us global concerns and opportunities. Put our hands together and welcome Mr. Pablo Breard.
I have to lower this, okay? Thank you, Wayne. Thank you, Bruce. I just want to start saying that I feel very much at home here in Jamaica. So thanks to my colleagues and friends and to all of you. And there's no one anecdote about a Jamaican, when I meet a Jamaican, that I always end up saying how friendly, how genuine your nation is. So I feel very much, as I said, very comfortable in your country, and I look forward to making new friends in this trip. So, Bruce, thanks for your words, but I think you were wrong. Okay. So, or your client was wrong, and I think when you said that, what I had said in the past, or perhaps some of our comments, turned out to be real, that was wrong, because I think at that event, if I'm not mistaken, the title was Cocktails and Conversations. So people had a drink before. So when you had a drink before, everything what the speaker says is correct, okay? So we decided to change that, so I will guarantee that I'm gonna be wrong this time, because we're having the conversations first. So anyway, I will try to be as fast as possible, and I just have my own timer here. So because you give an analyst and economist 30 minutes and expect 2.5 hours of stories. I will try to go as fast as I can, and you will have the presentation digitally in your computers, in your mobile devices anytime. So hopefully we can engage in a lot of Q&A after this with all our panelist groups. Quickly, what I want to do, and hopefully you let me know if everything shows well, trying to address a number of issues affecting the global context, and trying to put Jamaica in perspective. I will not and I have not come, and I will never come to Jamaica to trying to explain Jamaica is what's going on in your country. You know that. But I agree with what Bruce has recently stressed. This is really a great opportunity just to take the real challenges and issues just to put this country in a sustainable development mode, not growth, development. And I think the external environment, that would be my first comment, it's quite favorable. So we have to take advantage of it and do not waste one single second and execute things. I will talk about global rebalancing forces taking place in the economy, how the economic outlook that we see in the world is not negative. I would say it's quite encouraging and positive, but it's happening at an uneven pace, and different dynamics are taking place in Asia, in Europe, in the Americas. We have learned the third topic that probably it's implicit in many of my comments, and Adrian's and Bruce, are about leverage. We have gone through probably the last 3 decades, perhaps more, with a lot of global shocks. And at the core of each of those shocks, sometimes called crisis, there was a systemic leverage issue. It was Asia, as we all remember, in the 90s. It was Latin America in the 80s, Europe and hopefully not the US over the last decade. So clearly there are issues about leverage and how to make that leverage on a systemic basis sustainable. And we are in the leverage business, and I'm not a banker, but clearly, globally and systemically, it's an issue that we need to monitor. There's a lot of liquidity in the marketplace today, not only in Jamaica, but also globally, courtesy of the US Fed and its peer groups. The central banks of Japan, England, Switzerland, the European Union, and Canada. So there's no precedent about how low interest rates can be when they're zero, right? But, and I'm wrong, they're not zero, because in real terms, when you adjust inflation expectations, they're negative in certain cases, okay? So clearly, great opportunity for us to not focus on the literally cost of access of funds, but rather on making the structural reforms our priority. And then what is all this issue about emerging markets? Where are the risks? Where are the opportunities? Where are the flows going? And I will probably go in quite fast with many of these topics. I'm going to show you some graphs. That's what we do, So I try to be as artist as possible in communicating messages which are, let's be honest, very dull and boring. There's nothing more boring than, prior to have a good rum punch, listen to an economist talk about economics and finance. So, but let's begin quickly. Thanks to the IMF and they're improving the degree of statistics that are taking place, worldwide. There are certain countries that still have to do a better job, China, India, Argentina. But overall, we starting just to really believe, in all this international effort in getting more quantitative data from the world. I decided just to put, the new G10 group, because we all still talk about the G7 and the new G20, but reality, from an economic perspective, where are the top largest economies? And again, based on the latest data that put together by the World Economic Outlook report at the IMF last month, when we just take into account the average GDP size of 2013 and estimated 2014, we get that the composition of the world economy is as follows. The United States is less than 19% today of the world economy. Very important for us in the Americas, for Canada, for Jamaica, for Mexico. But from a global perspective, there are other players. Within the Americas, Mexico has become the 10th largest economy, so a country that is in constant reform. And Brazil has maintained its position as the world's 7th largest economy. Again, it's not Canada. Canada is ranked number 13, by the way, for those who want to know. So here we have, all of a sudden, the Americas. We have 4 major players. Of course, the US becoming, in terms of size, the largest one, but Brazil, Mexico, and Canada just we can call it second tier. Then within the European region, then we do have 4 members that belong to this top 10 group. And 2 of them are not members of the Eurozone, and that's what I want to highlight. So yes, we do have France and Germany there, but then we also have the United Kingdom and the Russian Federation, which are not members of the Eurozone. So not everything in Europe is about the Euro and the Eurozone. Something also to highlight. And finally, we have the Asia-Pacific region, China, as the numbers highlight, 16% of the world economy. And when we project, the current growth rates in a very conservative way, in 4.5 years' time, China become the world's largest economy. So then what the US and China do together in combination, in cooperation, in collaboration, thinking about the world as a system will affect us all. It's not only about the US. It's not only about China. It's what they do and, of course, how they manage the potential bilateral conflicts that have emerged and that may and will emerge in the future. And I'm not talking about next year, the next fiscal year. I'm talking about the next decade. So that's a bit of the map of the world economy, the top 10. Just to give you in terms of numbers, that will account for around 78% of the GDP size of the world, 10 economies. So whatever we do in each of these countries, it does not matter if the size of the Jamaican economy is small. We need to have a strategy to liaise and link with any of and all of those members, just to ensure that perhaps we connect with the world. In terms of growth, and again, I will just go fast because you can just review this at your own leisure, with a glass of champagne at home. But basically, the growth outlook for the next 2 years is not bad at all. Of course, it is uneven. Europe is and will be in recession. We got confirmation that France is already technically in recession after 2 consecutive quarters of negative economic activity. But 2014, which is probably 18 months away from now, looks much better. When we compare these numbers, what I've done is literally put North America, the Eurozone, and Japan as the high-income, traditionally developed economies, and then the emerging market world, Asia, Europe, and Americas, and highlighting China, India, Russia, and Brazil there. So the numbers indicate, that 2014, and some of them in 2013 are almost recovering just the pace of economic activity that we saw in the last decade. Europe still, fragile, and we will address some of those concerns, with the next slides. If we go again, put those numbers in a graph, and we separate the high income from the developing market world, and within this top 10 category, then we get that the high income countries are growing at an average rate of around 1%, 1.25%, whereas the emerging markets, are the ones the fastest growing. This is literally the average expected growth rate of 2013 and 14. I don't want to be very specific in 2013 or a given year, trying just to create a bit of a trend. But visually, again, this sounds very simplistic, because really is. These are the top 10 economies in the world. There is a group that is growing faster, and we want to connect with them. We want to connect with Mexico, which has become the 10th largest economy, and it's literally around the corner from us. Are we doing that? It's not only about just, our trips to Washington. There are also trips to Mexico City, Sao Paulo, or Moscow as well. And then we have the traditionally economies not growing, at the same level. In the case of the US, just a quick key message that I want to highlight, because the Fed policy is so relevant, to where the interest rate outlook will be in the world. And the US has become a very, very credible, institution worldwide. I would say much more credible than during the Greenspan era. And it's not about Bernanke, it's about the institutional strength, of the monetary policy framework that the United States has. And clearly what the US has been doing in monetary policy, both traditionally and unconventionally, has been mimicked, by other countries around the world. England, Canada, Japan, or the Eurozone, being large-scale asset purchase programs, so-called quantitative easing, intervention directly in the treasury bond markets, like the UK has done following what the Fed has been doing. But basically, the good news of the US economy, and particularly, and Adrian will just highlight this more in depth with respect to the impact on Jamaica, is labor market conditions are improving. And it's not about, what this graph shows is the unemployment rate that is declining, which from an economic perspective is a lagging indicator, something that passed. But also the leading indicators, such as, in this case, jobless claims, are declining, and as you can see, the trend, or the non-farm payrolls, which is literally the formal creation of new jobs, going higher. So all those trends, leading or lagging indicators, showing a better improved position for the labor market in the US, something that is extremely relevant for the Fed, because the Fed, as you know, has a dual mandate: price stability, which is containing price, inflation, but at the same time creating conditions for maximum sustainable employment growth. And the employment indicators are improving, even though the Fed is showing, a cautious tone. Then we do have what's going to happen in terms of our region. And again, I apologize. I have to include Jamaica in the Caribbean and Central American context, but for this purpose I did. And without focusing, what I've done is put in the average growth rate of these economies in the Caribbean and Central America over the last 10 years. And the expected growth rate of the last 2. And clearly, as you highlight, Jamaica has been really a low performer in terms of economic activity. This is not news to you, but it's important to put the country in perspective. And the expected growth rate for the next 2 years still is fragile in many of these countries. And I will leave you there. And highlighting the issue of Panama, which is very important, with the advent of the expansion of the Panama Canal, that they say that is going to be in operation in 2015. But let's make sure that we believe 2016, just to be more exact. But clearly it's 43% completed already, just the second set of the bilateral, bioceanic way. So that would be revolutionary, I would say, for the shipping industry, and may have multiplying positive effects for all countries in the region, and in my view estimation, including Jamaica. Okay? So the whole issue of rebalancing, as you may recall during my first slide, I used the word rebalancing. It's not only about the economic sides. The rebalancing is taking place in multiple dimensions, and one of them as well can be on the credit side. And one of the elements on the credit side has been that what we thought and we believed there was great high-quality credit is no longer the case after multiple crises. And again, this cartoon to me was very, very self-explanatory that we don't have just to be overly complacent about credit quality over time. You have to, even if you achieved the AAA rated category, you can lose it, as the U.S. did. Not only did the U.S., which has abandoned the AAA rated category, but also Japan did, and the UK, and the like. So, to put that in perspective of the rebalancing of credit risk or risk repricing, as we use that term in economics and finance, take a look at what was the picture in the so-called European periphery, badly called by the media the pigs, Portugal, Italy, Ireland, Greece, and Spain, which I find it quite offensive, but anyway. So let's call it European periphery. So I'm a Latin, so I am allowed just to be politically incorrect from time to time. Okay. So this is literally what it highlights. This graph is the notches above or below investment grade rating. And what it does is, 5 years ago, the periphery in Europe, they all enjoyed great credit ratings. I wonder what type of job were S&P and Moody's doing at the time, because clearly all of this was, in the case of Spain and Ireland, AAA rated category. So no wonder, how these agencies have been under a lot of scrutiny lately, by regulators to ensure that they improve the quality of their work. And then today, so what this means is, take an example, case of Ireland, AAA rated economy. Everyone was in love with Ireland, and nowadays is, according to one of the rating agencies, junk category. Okay? So this is how fast or how deep you can go. And I'm talking about a country of like Ireland, which, together with Greece and Portugal, are the largest borrowers of the International Monetary Fund. Jamaica has been awarded, this supported program, of around $1 billion by the International Monetary Fund. If you combine Greece, Portugal, and Ireland, it's over 70 billion, okay? Just to give you an idea of the size of the problem, or also the degree of intervention by multilateral financial institutions. In a country like Ireland that is showing improvement, still has a massive program, okay? Quickly, the global risk rebalancing, as I was mentioning in this rebalancing note, also is affecting the AAA rated group. And in this case, what I want to highlight is how many countries in the world have AAA ratings from Standard & Poor's, Moody's, and Fitch. And this is what we have. So it's the top 11, not the top 10. So in the Americas, only Canada. And the vertical axis highlights the size of the economy. In this case, will be around 1.5 trillion, measured in purchasing power parity terms. Canada is the only one who enjoys AAA rating with stable outlook of all three agencies. In Europe, you have just a number of countries. In terms of size, Germany will be the largest, but there's one rating agency, that carries a negative outlook on the German sovereign rating, which means that Germany can soon lose its fully AAA rated status. The UK has already lost it. And then the Netherlands, the three rating agencies have a negative outlook. So Netherlands probably is one of the main candidates just to be erased from this graph. And in the Asia Pacific region, Australia is, I would say, in terms of size, the most relevant one. Conclusion, if credit rating, agencies are subject to another shock in Europe, which sooner or later will come because there's no indication of a major improvement in debt sustainability in those countries, most likely you will have Canada and Australia the only one, relevant economy with AAA rated economy. And again, it's not only about, as Bruce said, we're the global bank of the year. It's Canada. It's probably one of the most, in terms of credit quality, and in terms of financial sector soundness, one of the most developed countries in the world today, irrespective of its small size. Okay, so the rebalancing also is taking place in other dimensions. For instance, the reserves held by the central bank, an indicator that's very sensitive in this country. Well, it's also sensitive in many other countries, particularly Latin American countries that in the 1980s were in default and today are major holders of reserves. And what I want to highlight here, for instance, on the left-hand side is, the top 10 countries in terms of size of reserves and which region these reserves are located. There are $7.7 trillion in cash held by central banks, almost 3/4 of that in the Asia Pacific region. And we know who's the holder of that, right? So it's not Brazil, which has $380 billion. So versus the 1 billion that Jamaica has, 380. And look at China, which is almost 3.5 trillion and just double as much or triple as much as Japan.